Quick update for you guys. Let's roll over into the order flow. So I can just give you guys a brief update on technical analysis, levels to pay attention to. First, we'll touch on XRP. All right, so in today's video breakdown, I want to talk about the fundamental landscape. I want to go over what took place today in terms of the fundamentals, and then I want to just talk about the Bank of Japan monetary policy announcement that's set to take place in the coming days ahead on Thursday, Asia session for us here in the United States. It'll be Friday morning for anybody that's overseas. Okay. But I want to show you guys how in this community, we have been talking about these things for some time. And now all of the retail headlines, everything that's taking place in terms of Yahoo Finance, Reuters, all the speculative nonsense that's going on amongst the retail crowd is all things that we've been covering and preparing for in our reports, in our podcasts, in our breakdowns, to really get you guys to focus and lock in on what's happening. And then after we go over that, I want to take a look in detail and cover Bitcoin's price action, take a look at some key volume levels that I'm paying very close attention to, and then also go and discuss more in detail XRP's price action. All right. After that, then I'll open the floor for any questions in terms of the fundamental landscape and price action and what we're going to be paying attention to for the total cryptocurrency market cap in the coming days ahead. And then if you guys want, I will break down my scalp positions from Asia and London session. Kind of irritated at myself because I could have caught like a 600 to 700 point freaking move from the bottom to the top. But I closed my position because I was tired of shit last night during London session. I'm actually happy I did because when I woke up this rising to trade New York, Top Step was down anyways. So whatever. All right, so just coming over here, all right, starting way back in October, just to show you guys, especially if you're new in this community, that now the retail speculative hype that everybody was calling us crazy for back in the beginning of October when the market was trading at $4.24 trillion at our institutional dark pool level. And we were telling everybody and warning everybody that these factors would lead to a market pullback. And this specific list that we had discussed in this video breakdown, this Zoom call, was created by you guys, was created by us as a team. We talked about drivers that could weigh on the market sentiment, leaning into a risk-off mood. We talked about hawkish Fed commentary, where any shift away from rate cut expectations would weigh on market sentiment. Any stronger than expected economic data or inflationary figures that could reduce the odds of near-term rate cuts. Any Bank of Japan policy surprises or faster or larger than expected rate hikes, or the market starting to price these global carry trade unwinds in. Breakdown in Gaza ceasefire talks or any Russia-Ukraine geopolitical tensions, any U.S. government shutdown at the time debacles that were taking place, so on and so forth. Okay. And so we predicted this market pullback at the top, and the exact environment that we're currently living through is the environment in which we predicted would take place back in October as a community. All right. Fast forward, this is a more recent video breakdown from just 3 days ago where I talked about the possibility of Bitcoin's price declining further into lower levels, mimicking and mirroring something historically that took place on Bitcoin via the triple moving average crossover on the weekly time frame that hasn't happened since 2012. So ever since 2022, I apologize. Ever since 2022, Bitcoin's price has been trending above the triple moving average crossover on the weekly time frame. And for the first time since I believe it was like March or April 2022, Bitcoin's price has now broken beneath the triple moving average crossover. So now the question is, does the TMA act as a resistance and take Bitcoin's price lower, especially if we see a risk-off backdrop in the coming days ahead, further escalate? Or do we see price pop back above the TMA and hold it as support, hold price action as support, and continue the trend upwards? All right. The reason why I'm sharing this with you guys is because, again, we created this video breakdown 4 days ago, posted it 3 days ago, and now look at what's trending in the headlines, right? Bitcoin, could it drop to 70K as Bank of Japan rate move approaches, analysts say, right? So always the retail crowd is catching up to what we talk about in this community. Even in this December 5th report, all right? So this is our report from over 10 days ago. We're literally beating freaking Reuters in this community. Right? Reuters is a major global news streaming platform that covers global economics. Okay. And in this report, I specifically broke down for you guys two possible scenarios that could unfold in regards to the Bank of Japan monetary policy announcement, where I specifically already started to note that in terms of price action, what's being priced in? What's being priced in is the Bank of Japan rate hike ahead of time. What could take place is if the market's already pricing in the Bank of Japan rate hike and they don't surprise with any hawkish rhetoric or they don't hike rates more than what the market's expecting, it could actually lead to a sell the rumor where everybody's selling the rumor now and a buy the news dynamic event. And here you can see we talk about this in this report where it says if markets are pre-pricing in a rate hike now, there is a potential for a sell the rumor, what's taking place now, and a buy the news dynamic, meaning worst case outcomes may already be baked into current price action. Well, if we come over here to this Reuters article from December 15th, 10 days later, they're literally talking about the same thing that we were discussing 10 days in advance. All right. So I love this stuff because it just goes to show that we're paying attention to what actually matters and what all these people, these analysts like Bloomberg, Reuters, Yahoo Finance are paying attention to in the reports that they chuck out to the retail crowd days after we have already discussed it and talked about it in our Zoom calls and our analysis, right? So reading this for you guys real fast before we head over to the TA, mind you, again, today, the labor market data did show signs of cooling, which does support continued case for monetary policy easing heading into 2026. I broke that down for you guys in detail. I will save you all the boring stuff and not read it for you all in today's call, but make sure that you guys go understand how the labor market data came out today. It did show signs of cooling. There was some slight strength in some of the figures, but nonetheless, it overall leaned dovish. We saw a slight market blip. I call it a little cough in the total cryptocurrency market today. Market was up right after the news around, I think we hit a little blip of around 26 to 30 billion dollars on the day up. However, markets have kind of given back those gains as of time of recording. Nothing substantial. We're still trading at weekly lows. Same thing with MNQ. As soon as the news dropped, market popped up slightly and has since then retraced and given back its gains for the New York session. So nothing super exciting in regards to today's data. We're still just in a wait and see mode as I feel like the primary driver of market sentiment this week is going to be the inflation data that we get this week in terms of the CPI. And then the Bank of Japan monetary policy announcement, which we already know the market's pricing in a 25 basis point cut. So again, our focus is going to be on that forward guidance from Governor Ueda and any Bank of Japan officials, not the actual rate hike itself, unless they were to surprise the market with a higher than 25 basis point rate hike, which I don't believe they're going to do. If they did, that would be something that would be concerning. But I don't think that that's going to take place. All right. So let's read this Reuters article in regards to our December 5th report. It's literally like mirroring what we've already talked about, but nonetheless, good information. December 16th from Reuters. The Bank of Japan is set to raise interest rates on Friday to a 3-decade high and pledged to keep borrowing costs high, closing the year with 2 rate hikes despite the headwinds from U.S. tariffs and the inauguration of a dovish prime minister. 2 rate hikes, meaning the one that took place in January and now the one that's most likely going to take place in December. While a hike still keeps policy rates low by global standards, it would be another landmark step in Governor Ueda's effort to normalize monetary policy in a country long accustomed to unconventional easing and near zero rates. With stubbornly high food costs keeping inflation above its 2% target for nearly a year, the Bank of Japan is expected to raise short-term interest rates to 0.75% from a 0.5% at a 2-day policy meeting ending on Friday. Just make sure my microphone is sweet. The central bank will also stress its resolve to continue raising interest rates, though at a pace dependent on how the economy reacts to each increase. There's no gap in the view of the economy between the government and Bank of Japan. Finance Minister, I'm going to butcher this person's name, SK, told reporters on Tuesday, signaling the administration's tolerance for a hike to 0.75. Any such move would underscore the Bank of Japan's growing conviction that the Bank of Japan was making progress in sustaining a cycle of rising inflation accompanied by solid wage gains, a prerequisite, it said, for pushing up borrowing costs. In a rare HOC poll released on Monday, the Bank of Japan said most of its branch offices expect firms to continue bumper wage hikes next year due to intensifying labor shortages. With Ueda having essentially pre-committed to the December hike in a speech earlier this month, this is important, Markets are focusing on what signals the governor will drop on the future rate hike path at its post-meeting conference. So this literally word for word is exactly what we've been talking about in our reports. The rate hike has already been priced into the markets. It was priced into the markets back in October when we were talking about it, when the market was trading at 4.24 trillion, right? That was one of the primary drivers as to why we saw a risk off mode flip bearish in risk assets because the market started aggressively pricing in possibility of now a rate hike in December, right? So now that we already know that that's likely to happen, again, the forward guidance is what's going to be most important. What does Governor Ueda say? Does the market start to price in continued aggressive hiking from the Bank of Japan off of Governor Ueda's comments, or does the market take a more laid back approach, brush off continued rate hikes by the Bank of Japan because Governor Ueda comes out dovish and he's like, hey, look, data's not supporting more rate hikes right now. We're in a wait and see mode. There's nothing to worry about right now. And he doesn't create a whole bunch of chaos and uncertainty in the markets, and the markets maybe slightly recover, right? Bank of Japan policymakers have signaled their intent to tread cautiously as they push rates closer to levels deemed neutral to the economy, which the central bank estimates as a range of 1% to 2.5%. But Ueda's also facing pressure to drop hawkish signs to avoid triggering a fresh bout of yen declines that push up import costs and broader inflation. Analysts say this is also important because if we do see yen depreciating in value, that could trigger a intervention, which we know is a catalyst that could bump up the yen strength temporarily and weigh on risk assets in the short term. While a weak yen boosts exports profits, it could prod retailers to pass on costs and raise prices, adding strains to households already suffering from slided real wages. To finish this up, it says the number of food and beverage items that saw prices exceed 20,000 this year, up 64%. Remember, these are all just jargon numbers. You don't really need to pay attention. From 2024, that is likely to fall. Let's see. But the number of price hikes could spike if yen declines speed up. This is important right here. A heightening inflationary risks and complicating the Bank of Japan's rate hike decisions next year, analysts say. Japan stands ready to intervene in the currency to prevent an abrupt, sharp yen fall out of sync with fundamentals. So if we started to see a scenario where the yen started to depreciate rapidly against, say, for example, the US dollar or any other major FX pair, it could be a case for concern, as the Japanese yen officials could possibly start to intervene with the currency, which we know, historically speaking, has not been something positive for risk assets. Senior economist at Sumi Trust does not expect the yen to appreciate much with the December rate hike already priced in by the markets. Check this out, right? This right here is exactly what I said here in December 5th for you guys, how this rate hike's already priced in. Sell the rumor, buy the news event. Everybody's been selling the rumor that the Bank of Japan is going to hike rates, which has led to a risk-off event. But if the event comes out, the Bank of Japan's actually not as hawkish as everybody had anticipated. They hike rates, it's already priced in, and they give dovish forward guidance. Well, what's most likely going to happen? We're probably going to see either continued consolidation or maybe even a slight bounce in crypto prices. Don't forget that any shocks to the upside, if the yen does depreciate in value after this rate hike announcement or anything does take place that weighs on yen's price, we still need to be cautious of a possible intervention that could unfold. All right. So I just thought that that was interesting because this Reuters report from the 16th, as of time of recording, that is today, literally is word for word stuff that we've been discussing as a community months in advance. All right. So that just really, I guess just sets the tone for me that I'm on the right path for you all to give you guys good, juicy, valuable information before the rest of the retail crowd catches up to it. With that in mind, okay, looking at the total cryptocurrency market cap and the calendar ahead on the US data front real fast in the coming days, tomorrow specifically, we have a bunch of scattered FOMC speakers. So Fed member Waller, Fed Williams, and Fed Bostic all speak. We will be paying very close attention to any commentary on monetary policy, state of the economy, labor market, inflation data, so on and so forth, that could change the prospects of or support the prospects of future rate hikes heading into 2026, which we know is a key market driver as of right now. The next important data day for the United States will be Thursday's CPI and unemployment claims, coupled with the Philly Fed Manufacturing Index. I'll update you guys on that as time gets closer. So tomorrow during the Asia session rollover, I'll update you guys some if-then scenarios in the fundamental section on what we would ideally like to see. And then Friday on the US data front, we have some more scattered Fed speakers. and existing home sales and the consumer sentiment that will be very important, coupled with the inflation expectations to end the week. All right. That will be coupled with the monetary policy announcement from Governor Ueda and the forward guidance Thursday Asia session for us here in the United States, Friday morning for you guys overseas. All right. So that is what we'll be attentive to in terms of scheduled data for the remainder of this week. Don't forget, I believe today we were supposed to see some net new announcements on the Ukraine-Russia debacle, possible ceasefire talks, so on and so forth. I will still be paying attention to those escalations. We're still keeping in mind any Middle East escalations or tensions, any geopolitical uncertainty that could stem from Japan or China, Taiwan, any tariff updates lingering in terms of Congress and their decision on Trump's tariffs heading into the new year. All of those things we still need to keep in mind could create headline shocks to global risk assets and create a flight to safety, i.e., more demand for gold, silver, and other safe haven assets. All right, so just be cognizant of those headlines. I will make sure to keep you guys updated in the fundamental section. Taking a look real fast at the total cryptocurrency market on the daily, an area of interest that I'm paying attention to the upside that would make me hopeful that we are set to see a possible more or better market recovery than what we've seen in terms of these dead cat bounces that we've been getting pretty much for the past couple of days now, is a break above the 3 to 3.2 trillion dollar mark, i.e., where this aggressive seller, you can see here in these bearish candlesticks, if we were looking at this on order flow, seeing this with the naked eye, we know that in these bearish candlesticks, there were most likely aggressive sellers that broke through this support here. You can see after they broke this support, buyers tried to make an attempt to break back above. However, they got trapped in this bullish candlestick. Sellers then continued to become aggressive, pushed price lower, and turned this previous support into a resistance. So you can see now how this key area is acting as a resistance. Buyers have made an attempt to come back up, break above it. They failed, got trapped, price declined. Same thing again. Buyers made another attempt to push prices back up, break above this resistance, maybe turn it into support. They failed, got trapped at highs, and since then again, prices have declined. So if we want to see higher prices in terms of technical analysis in the total cryptocurrency market cap right now, we would ideally like to see this most recent local bottom hold as support. Buyers trap sellers at these levels, maybe a slight decline or maybe a small push beneath these levels. Buyers trap sellers, become aggressive enough to break back above a previous support that turned resistance, turn it back into support, and break back above the $3.2 trillion market cap level. That would also most likely coexist with a triple moving average crossover, where as of right now on the daily time frame, you can see that since pretty much the middle of October here in this area, the triple moving average has acted as a resistance, with the 50 EMA leading the charge at the top of price action. We would ideally like to see this triple moving average cross over and support price action, coupled with a break and move above a previous support that turned resistance, turning it back into support at the same time. If we can see some type of price action like this, then I will become hopeful that we will start to see some form of a higher market recovery. Until that takes place, I am more skewed to the downside that price action is likely to continue lower in the coming days ahead. Why is this not working? There we go. And so with that being said, if price continues to the downside, levels that I'm looking at in the total cryptocurrency market cap are still as follows: anywhere between 2.5 to 2.4 trillion dollars to come back and revisit these lows, where I do believe that buyers will try to make an attempt to defend at these prices. If we do seek lower prices beneath these levels, taking out any over leveraged positions that exist beneath these lows, the next likely scenario is for us to come down into these lower levels for a possible reaccumulation. And that is going to be very painful. That would put us at about 2.2 to 2 to possibly even 1.9 trillion dollars in total market capitalization, right? So be prepared for that possible reality if it does unfold, especially if we did see any aggressive unwindings of yen carry trades. All right. This is a post I thought was very interesting, right? I took the post from Twitter, copied the trading link, and this is the exact post where you can see right? I warned people at the very top of price action, speculating that any cryptocurrency will benefit from any potential Strait of Hormuz shutdown or yen carry trade unwind is detached from both geopolitical reality and actual market reality given the current environment in crypto, right? Let everybody know that that was taking place at a freaking high, right at the tippy top of price action. And now you can see the current environment in terms of the retail backdrop catching up to the sentiment, right? So, quick update for you guys. Let's roll over into the order flow. So, I can just give you guys a brief update on technical analysis, levels to pay attention to. First, we'll touch on XRP. So, this is XRP on the daily. I've drawn a better little tiny display for you guys on what we would ideally like to see in terms of candlesticks and price action to see higher prices. In yesterday's update, we had mentioned the possibility of rolling over into $1.84. Guys and gals, I cannot stress, look at this freaking accuracy here, okay? Price came down, trapped sellers, buyers then became aggressive. You can see there's a little tiny buy volume at $1.84 to the absolute freaking pip on our order flow software. Okay. This is the most accurate software, hands down, on the face of the internet, and we have access to it in this private community. All right. Huge step up from the retail side of things. Nonetheless, in recent times, you can see that in this bearish candlestick, there's a seller visualized by this trapped sell imbalance at the bottom of price. Buyers have tried to make an attempt to push price back to the upside. However, you can see there's a seller that exists right underneath of this previous buy wall or support that is now currently acting as a resistance. We would ideally like to see price action break bullish above this previous resistance, engulf all of these previous bearish price action or sellers in the market. And where you can see right here at this high, there's a trapped buyer followed through with a sell wall sitting at roughly about $2.04. And so extending this sell wall over to the right-hand side, this is the type of price action that we would ideally like to see now that we've seen a trapped seller at $1.84 if we don't want to see any lower prices. Looking over here at this bullish candlestick, where you can see that we see a buy wall thrown up, followed through with a huge buy imbalance, signaling massive amounts of buy volume, followed through with a huge green buy volume inside the bullish candlestick. I've kind of mapped that out for you guys here. We would ideally like to see a bullish candlestick supported with a huge amount of buy volume, break back above the previous trapped buyer here, and then turn this sell wall into a support. So after we were to break above this sell wall at $2.04, we would like to see a retest in the form of a wick holding this sell wall as a support. And once price retests this as a support, we'd like to see a trapped seller at the $2.04 range where there's previously a trapped buyer before price rolled over. And then we would like to see that followed through with a continued buying aggression, buy volume in the form of a buy imbalance or a green buy volume circle, right? So something like this. I know that these candlesticks are obviously, of course, not the same size, but you get the gist. Now that we've seen a trapped seller at $1.84, we'd like to see price break back aggressively above the previous trapped buyer, turn the sell wall into a support, retest it, trap sellers, then buyers following through with aggression, pushing price higher. If we cannot see that, and we see this current resistance or previous support that is now acting as a resistance, as you can see this in real time, this red volume here, where there's a seller most likely passively trapping buyers, just turned from red to green a second ago. If we cannot break back above this previous support at roughly about $1.95, then the most likely scenario is that we are going to see price roll over and head down into lower territory. That is going to open up the door for our next targets coming in at about $1.72 to $1.69. Slightly underneath of that, I do have a buy dark pool that has come up at about $1.56. Anything lower than that, I'll make sure to update you guys. Be mindful that the lowest dark pool and delta that we have on XRP's price that our radar has drafted up comes in at 77 cents. I know that that is not on our radar on the order flow right now, but nonetheless, on our deltas and our dark pools inside the Discord, those levels have popped up. So I've went ahead on spot trading platforms and put limit orders at 77 cents with like 500 to 1,000 bucks just in case, right? Not financial advice. So you guys have some downside targets to pay attention to. You now know in terms of key volume areas and metrics using order flow, what levels we need to see XRP's price break back above in the short term to see anything higher. That comes in at about $2.04. If we can turn that into support, see a trap seller and buyers become aggressive following through with that move, then maybe we can stage a recovery on XRP to possible higher prices in the $2 range to possible $3 range on XRP. Taking a look real fast at Bitcoin, because everybody's fearful that Bitcoin's price is going to crash and fall off the face of the earth. Let's take a look at some key dynamics in terms of volume on the daily. All right. So this level to me is very, very interesting. This comes in at around $94,100. Why? Because you can see this previous move here, buyers tried to make an attempt to engulf this previous aggressive seller. They failed. They got trapped. Sellers became aggressive enough to turn this support into a resistance, break it, and continue to follow through with aggressive sell pressure. Here in this area, you can see we see a massive buyer at the bottom of price at about $83,000 per Bitcoin. Huge buy imbalance, trapped sellers and bullish candles, supported by buy walls. And where did they push price all the way back up into? They push price all the way back up into this huge seller that comes in at, again, about $94,100 on Bitcoin. However, when the buyers came in, you can see huge buyer here, trapping all of the sellers at lows, another huge buyer here, same thing, followed through, higher highs, higher lows, another huge buyer here. What you'll notice about this huge buyer, what took place? They failed to break above the aggressive seller that existed here in this area that pushed price lower at 94,000. And when they came up to test the strength of the seller, you can see clear as day, this buyer got trapped at a high and prices have since then declined. So this level for me on Bitcoin, if we want to see any form of a recovery in the coming days ahead, is of key importance. We need to break back above the $94,100 range, and we need to turn this into support. We need to overcome the seller that is aggressive here in this area, passively defending this area, trap them, and see buyers become aggressive above $94,000 on Bitcoin if we want to see any form of higher prices. Now, most recently, you can see that where this huge buy imbalance or aggressive buyer exists at roughly around $84,900 per Bitcoin, price has come straight down into this area. Sellers have now been trapped at lows. There is not a yellow sell imbalance, which is something of concern in my personal opinion. But nonetheless, you can see currently in this bullish candlestick, there's a small, tiny, aggressive buyer down here, defending most likely their previous buys. And right now, there is a trapped seller in this bullish candlestick. So what I would ideally like to see is some form of a bullish candlestick like this one here or this one here with large amounts of buy volume in it, engulfing all of this previous bearish price action. It would be ideal to see a trapped seller at a low, which we could most likely probably see on the lower time frames, and to see Bitcoin's price action break bullishly back above this previous area of concern, which is around 94,100. Trap sellers at these levels that are likely to try to defend, turn this into support, and break higher. The next area of interest where we can see a huge sell imbalance exists on Bitcoin comes in at about 99,000, where you can see here, previous trap seller, this was a support, an aggressive seller broke through the support, turned it into a resistance, and became aggressive enough to continue to push price down. If we can break above the $94,100 threshold, the next area of interest before we marry any bias that Bitcoin's going to break back up into new higher territory comes in at 99,000. We need to overcome these two key levels before we get excited. Because if at any point in time buyers push price back up into these levels, but sellers trap the buyers again at highs, that could be a case for concern. To the downside, if this support, which in my personal opinion is the last support for Bitcoin before we dump, if this breaks, my next key area of interest is going to be between anywhere of 80,000, which would come and take out this most recent low or wick at around 80,500 to 76,000 as our next key areas of interest on Bitcoin if price drops lower. All right. So now you guys can kind of see an insight into the battle between buyers and sellers. It's so crazy that, again, here in this community, we have the ability to access this type of information. Scalper is always sharing this updated info in the order flow analysis for you guys inside the Discord in the Delta section. He's also giving you guys screenshots into the order flow to give you guys updates on buy volume and sell volume that exist in the market and where price of key levels need to be broken above, hold as support, or are currently acting as a resistance. All right. So these are all the levels that I'm paying attention to on Bitcoin and XRP for now. I will continue to update you guys with accuracy. No hopium, no hype here, just real insights and analysis. That's really all that I have for you guys. In the coming days ahead, be very mindful of any major headline news events, as I feel like everybody's thinking that the major event that's going to move the markets in the coming days is going to be the Bank of Japan. And for some reason, just based off of my 9 years of experience in the markets, when when everybody's focused on one thing, that's usually not the thing that happens. And right now we're seeing everybody's focus shift towards the Bank of Japan. Well, I feel like that's just too predictable. It's too predictable that right now the markets are like, oh my gosh, if the Bank of Japan hikes rates, Bitcoin's going to drop off the face of the earth. We've been seeing those headlines now since like October. It's kind of priced in. If it doesn't come out more drastic than what the market's already prepared for, it's likely not to have an impact, which means there's likely to be another catalyst that unfolds that nobody's paying attention to. So be mindful of those headlines. I know I will be, and I will update you guys in the Discord as time progresses. Outside of that, though, for this particular portion of the breakdown, that is all that I have for you guys. I will go over my trades quickly if you all want me to. In the Discord section in the chat, I shared both of my trades from Asia and